So the Bank of Canada has changed its overnight lending rate to 3.25% today. This is good news. And if you've been following my videos, a few weeks ago, we had talked a little bit about why we expect interest rates to go down more than what generally is expected. So again, so the Bank of Canada lowered its overnight lending rate by to 3.25. Now, what does that mean for your mortgage? So, if you have a variable rate mortgage, remember it's based on the prime rate. And right now, the prime rate is at 5.95%. Now, sometimes many people are surprised that the prime rate is so high. We will hopefully see a decrease on the different banks' prime rate shortly. And I've already gotten a notice from one lender. Most lenders are also following suit and decreasing their prime rate by 0.5%. So right now it's at 5.95%. If it's decreased by 0.5%, it's going to be at 5.45%. So that has a good impact on your variable rate mortgage. And I have just received a few inquiries today, clients saying, hey, I might want to switch from a fixed rate to a variable rate mortgage. Now, remember, there are different types of variable rate mortgages. There's a variable rate mortgage that has a static payment. So the payment remains the same, but the amount between principal and interest differs. Adjustable rate mortgages, how that mortgage works is the payment fluctuates based on what's happening with the prime rate. So you remain on the same amortization schedule and the payment fluctuates. So if you are interested in a variable rate mortgage, we can go through those two options. Companies like TD have a static rate mortgage. And as you know, we do mortgages for TD. Some of our wholesale lenders or monoline lenders like First National have a adjustable payment. It's adjustable rate mortgage, so they have a floating payment. And there are pros and cons to each of those. So if you're not sure, and if you want sort of I guess, a variable rate mortgage, there are two different types, and we can talk a little bit about that when you connect with my office and schedule an appointment. Now, what's happening with fixed rates? So remember, fixed rate mortgages are based on the bond market. And the bond market is a leading indicator. So right before the presidential election, we actually saw a spike in the bond yields. So many of our customers just a few weeks ago were locked into a fixed rate mortgage that is going to look different in the future. So if your mortgage is coming up for renewal or you currently have a mortgage approved at our office, we will be in touch with you because we help you manage those interest rates. So you don't have to worry if you've already got the mortgage approved. If the bond yields come down, and we are starting to see that, it takes fixed rate mortgages about 2 to 3 weeks to react to that rate adjustment. So for those of you who are renewing in the new year in January, you should start to see some benefit to that. For those of you who are renewing in December, we tried to get your rate lock in before the presidential election. But in any case, our job is to get best rates for our clients and get them good mortgages. So this is just an update for you. We love helping people. If you do have any questions or have a current mortgage in process, reach out to us, please. We will be following up with you shortly, and we will give you an update within the next week or so if you have a fixed rate mortgage, because we are hoping that with the bond yields, we are going to start to see some decrease in the bond yields, which is good for everybody, which means that your fixed rate mortgage should come down. Okay, so remember, gone are the days of an interest rate of 2 or 3%. We are seeing mortgage rates now in the mid 4%. And I think that's where we're going to be for quite some time with fixed rate mortgages. Happy to help. Looking forward to connecting with you. Have a great day.